In today's video, we're going to be having a look at what Governor Bailey has said from the Bank of England and at the Monetary Authority of Singapore, in addition to a little bit of a market update. Hello and welcome to another ACY Securities Hot Topics video. My name is Alistair Schultz and I'm going to be your host for today's session. Now, moving on, the first thing we're going to start off with is a market update. Last night we saw the S&P 500 go up in a rally. We've seen the NASDAQ come up as well, and we've seen a number of other stocks come with them, obviously. Now, the first thing to take note of, this is the fourth day of gains for the S&P 500, and for the NASDAQ, it is the most gains it's made in a single day since April. Now, in what we've seen so far is that Amazon and Apple have really led the surge so far. The reasoning behind this is that we have Prime Day coming up, very similar to Battery Day for Tesla, and a new product or a new iPhone for Apple is coming out soon. So investors have gotten in a little bit ahead of the curve. I'm going to talk a little bit more about them in just a moment, but to move on with today's market update, we've also had advertising giants increase in value based on Deutsche Bank increasing their rating for them today. A bit of an upgrade for all advertising firms. So we're looking at Facebook and the like of Twitter that are actually seeing the benefits out of this upgrade. Now, today in the Asian session, I am expecting to see it follow suit on the US equities with a little bit of a rise, but we won't know until really the end of today's session if it holds true for the full day. Now, in terms of the numbers, S&P 500 was up 1.6%. The Euro Stoxx 50 was up 0.7%. The MSCI Asian Pacific Index was up 0.9%. We've seen the dollar index being flat based off US stimulus news. We've also seen the euro up down 0.1% and trading at $1.18. We've also seen the pound up 0.2% at $1.30. And WTI is down 2.6% at $39.54 a barrel, whilst gold is down 0.4%, trading at $1,923 per ounce. Now, moving on to what's happening on the NASDAQ. We've seen 4 days worth of gains also applying on the NASDAQ as what we've seen in the S&P 500. So far, the number is up about 3.1%. It could be a little bit higher even now. And it's now sitting within 2.7% of its September 2nd all-time high. Now, Apple and Amazon led the surge, just like I said before, based on Prime Day and their iPhones. The reason that the NASDAQ has actually come up so far is because of the weighting of Apple and Amazon as well. It's nearly 20 to 25% of the index's overall weighting between the two of them combined. So you would expect with a rise in both of those stocks that you're going to see a rise in the NASDAQ quite heavily. Now, the other part to look at here that I've been paying attention to is the volatility. Now, volatility indexes have all gone up. We've seen the volatility levels rising. Now, usually when we see a rise in volatility, you see a fall in stock prices. But this year, in 2020 specifically, we have seen them operate in tandem. So a surge in stocks relates to a surge in volatility. Now, the reasoning behind this is actually coming from stock options purchases. We've seen quite a number of times this year. We saw it in August, we saw it in September, we saw it in March, we saw it in May, that whenever this sort of happens, we see the demand for stock options to actually increase. So to me, we are seeing that sort of occurring again, which means that we are maybe seeing what might happen in the future. If people do continue to invest through options as opposed to equities, then we might end up having a chase point instead. So instead of looking at equities to see what options do, we're going to be looking at options to see what equities are going to do. Now, the next part of that to also consider as to why it's risen so high is yesterday was a bank holiday. It was Columbus Day in the US and Thanksgiving in Canada. So the North American market will have seen volumes being a little bit lower than we would usually anticipate. So therefore, we see a little bit more churn and a little bit more reaction in price. Of course, we've also heard on US stimulus, and this is another thing that we're going to have to consider because yesterday we heard that there were going to be likely no more talks about stimulus for at least this week. That doesn't mean there is an agreement on the way, it just means it's been postponed, which now means that people are probably thinking, well, instead of investing in those cyclical stocks, investors are going to move back to what worked before. Those growth trades that they were seeing earlier in the year through the likes of tech. So that's probably another antidotal as to why we're seeing things move up. So investors are favoring those growth stocks, the G stocks, if you will, and a little bit of the other action there going on between stimulus. We've got a new product release. We have Prime Day, and generally we're seeing some good all-round investment options going forward. Now, looking at what's gone on overnight, we have had the Bank of England's governor, Andrew Bailey, who you can see on the screen behind me now. He's had a little bit of a chat about what the Bank of England might be coming up next. Now, so far, he's hinted at more easing, so I am expecting to see more quantitative easing, but they are still researching negative interest rates, and they're worried about what financial institutions might be able to afford. So they have basically gone and asked some of the major financial institutions to do some research into how they might be able to handle negative interest rates and whether it's going to be bad for their businesses. Now, they're still waiting to get data back on that. At this point, they're saying they're not ready for negative interest rates. And so that's still in the toolbox for now. It's still an option, but it's not ready to be executed at the next meeting, which is November 5th. Now, what am I expecting to see? Right now, we're at 0.1% for an interest rate. We can basically account for there's not going to be a negative interest rate at this point in time, so we're not going to see a cut just yet. 0.1% is here to stay for now. I am expecting to see expanded quantitative easing targets though. How much, how far, and what on specifically is a little bit out of the ordinary. We're not entirely certain on that front, but that is definitely a space I'm going to be watching for. Sub-zero rates are definitely a maybe for 2021, however. I would anticipate in the first half of next year, or 2021, that we might start to see more chatter about negative interest rates, and perhaps those financial institutions have prepared themselves enough via cash books and balances to be able to afford to do that properly. Now, moving on, we've also heard from the Monetary Authority of Singapore. Not just yet, but we are anticipating hearing from them on at least Wednesday. We have heard some chatter from some of their members at the MAS, but nothing that is concrete to say we're doing this exactly. Now, in my mind, when I think about the Singaporean situation and the economy and what the MAS might decide to do, we have to look at what's going on as a whole. The economy is not doing too well. They are a trade-orientated economy, and right now we're not getting a lot of trade. They're also a tourism-orientated economy, and there's not much tourism either. So consumer spending is down, trade is down, labor is down. And so therefore, we have to make an assumption that perhaps the economy isn't going as well as they'd like. The caveat to all of this is the US dollar, however. The dollar has been sitting flat today, and it has been strengthening overall across the board in general based on there not being any stimulus. So we've been seeing a rise of the US dollar. We've spoken about this on the euro and other currencies as well. When it comes to the Singapore, the situation that they might hold off doing any adjustments purely because of the value of the US dollar, but they will also be looking at a number of other elements as well. My anticipation is we're not going to see much change. I think when I was looking at a survey a little bit earlier, perhaps 6 out of 20 were thinking that there might have been a rate adjustment, but in general, we're not going to be seeing much. Another thing to keep in mind about the MAS is they don't change interest rates much like the rest of central banks. They actually look at a target rate between a couple of different currencies. So keep that in mind. Now, moving on, today we have some earnings results coming out. In fact, this week we have a number of banking and financial institution results coming out. So when we look at what's going on today, CBA Annual General Shareholders Meeting is on today. They started at about 9:40 this morning. There's been dribs and drabs of news coming out, but not a huge amount. You're welcome to certainly log in and get a full in-depth detail. I'm going to have a bit of a review of it at the end of today, though. Of course, if you are trading Commonwealth Bank stocks, then it would be worth getting in and seeing if you can get any reviews ahead of schedule. Now, other earnings results that are out today, JP Morgan in the US session, Citigroup as well, and BlackRock. So we'll be keeping a close tab on those. Tomorrow we have more coming and more again on Thursday. So these reports are going to be giving us a bit of an update right before Christmas about what might be going on within some of these financial entities and how the US stock market is going from a financial standpoint of view and their financial institutions. Now, looking at news ahead of today, we've already heard today, and this has just happened whilst I was making my deck up today for us to be able to talk on the video. We've heard that China is going to be canning all coal exports from Australia. So it's likely going to be hitting our mining sector here in Australia with a little bit of harshness. More will probably become to follow on that. So if you are going to keep an eye on it, keep up to date with that, particularly if you've got your mining stocks. Of course, in the news ahead of today that is scheduled, we have got claimant counts or unemployment claims coming out of the UK. We also have the unemployment rate today, but both of those are currently set for low impacts. So I'm not expecting to see too much change out of that. We also have a German zoo report where they gauge the business and economic health over the German economy over the last sort of 6 months and for the forward events as well. So that'll be an interesting one to see how the people on the ground in Germany and the small businesses are really thinking about the economy in general. We also have the NFIB Small Business Index for the US coming out, so that'll be one to keep an eye on, see if that gauge is expanding or contracting. And we have US CPI, or Consumer Price Index figures, resulting for both core and your staples. So keep an eye on what is happening out there today. There is a bit of more action than we saw yesterday. It is also not a bank holiday today in the US, so even though it was yesterday, we might see some more action tonight. Now, if you do have any questions about today's video, feel free to get in contact with me at talktoal@acy.com. Of course, don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.